Example, on December 1st, X5, NewCo signed a contract to receive $9,000 of consulting services from consultant A over the 3-month period ending 2/28/X6. Assuming the services were provided evenly and NewCo paid for them on 2/28/X6, record all of NewCo's required entries and adjusting entries for 20X5 and 20X6 to comply with the matching principle. Per the matching principle, when should NewCo recognize the consulting expense? And the answer is when they receive the benefit. On December 1st, no benefit had been received yet. They signed a contract, but no benefit had been received yet. However, by the end of the year, they will have used up 1 month worth of consulting services. So if you take the full $9,000 divided by 3 months, that's $3,000 of consulting expense per month. By the end of X5, you will have incurred $3,000 of consulting expense, even though no cash had been paid. In the following year, 2 more months will have been used up. So $6,000 of consulting expense would be recognized in X6, and a $9,000 cash payment would have to be made. $6,000 of that relates to the current year consulting expense, and $3,000 of that is related to the prior year consulting expense. The journal entries. On December 1st, no entry needs to be made because no services had been received. However, jumping ahead 1 month to December 31st, X5, $3,000 of consulting expense needs to be accrued. Debit consulting expense $3,000. And since we haven't paid for it yet, we would need to credit a liability. And we call that liability accrued expenses $3,000. We then post that credit to the accrued expenses ledger account to show that at the end of the year we owe $3,000 to the consulting firm. In the following year, on February 28th, we'll actually receive 2 more months worth of consulting services and pay for them. Debit consulting expense $6,000 for the current year consulting expense, and pay $9,000. And as you can see, the debits do not equal the credits. We need $3,000 more debit, and that $3,000 debit is the paying off of the prior year liability of $3,000. By posting that to the ledger account, we wind up with no further accrued expenses owing at the end of X6. Stepping back and looking at the big picture again, we recorded $3,000 of a consulting expense in X5, even though no cash was paid. Then we recorded another $6,000 of consulting expense and fully paid off all accrued amounts. Did NewCo properly comply with the matching principle and accrue the expenses into the correct periods? Yes, it did.